Welcome to The Chemical Show, the podcast where chemical means business. I'm your host, Victoria Meyer, bringing you stories and insights from leaders driving innovation and growth across the chemical industry. Each week, we explore key trends, real-world challenges, and the strategies that make an impact. Let's get started. Welcome back to The Chemical Show, where leaders talk business. Today, I am speaking with Dewey Johnson, who is the Senior Vice President of Dow Jones and, more importantly, perhaps, the Global Head of Chemical Market Analytics. So we're going to be talking a little bit about Dewey, chemical market analytics, and what the heck is going on in chemical markets today. So, Dewey, welcome to The Chemical Show.
Thanks, Victoria. It's a pleasure to be here.
Really glad to have you here. So let's just start with you. What's your origin story? How did you get into this wonderful world of chemicals?
I've always been interested in science and how the world works, and was always was good in math, and so it was a kind of a natural fit. I joined the chemical industry through Eastman Chemical Company, which was the chemical arm of Kodak, a few decades ago, and did the technical piece. So was process engineer and then project engineer building chemical plants, different parts of the world. And then went into, decided I wanted to kind of have a line of sight to where the money flow is and went into commercial roles, global sourcing. Eastman at one time was the largest producer of PET, of polyester. And so I was in the strategy group there as well as, and then sourced for that group. So sourced aromatics and olefins, and then had commercial roles. Eastman was also big in the acetyls business. So purchased methanol, sold acetyls, did industrial gas contracts, kind of that varied area. And then somewhere along the way, taking some corporate strategy roles, became very interested in kind of modeling, quantitative type models, and everything from game theory on kind of what, if we take this move, what does our competitor take? And kind of in a rigorous way, not the simplistic way, but found some experts in game theory that GM used, and that's a whole community. And then from that, also did a lot of dynamic modeling. Chemical industry, we know about feedback control theory used to control processes. It can be applied to socioeconomic systems too, and MIT is a leader in that. And so I got very interested in that, have worked with a number of the staff at MIT as well as graduates of that program, System Dynamics, and found that to be very intriguing. And so I've always found it interesting to take the real world behavior, convert it into quantitatively rigorous models, and then be able to interpret that back to the real world. And I think for CMA, that's kind of a skill set that we look for, and it's kind of a hard to find skill set.
Yeah, I was going to say that totally then connects with what chemical market analytics does. So out of curiosity, when did you venture out of working for a chemical company to being this analyst and running an analytics business that supports chemical companies? How long have you been doing this?
Yeah, great question. I'm younger than I look, let me put it that way. But after a number of years at Eastman, I was a big client of CMAI. Again, appreciated market insight, the data and the market insight in terms of causality of behavior and so forth. CMAI was the leader in that, and that was a big client. An opportunity came up in one of the business areas for CMAI, and I knew the firm well. And so I moved from Tri-Cities, Tennessee, which was the headquarters of Eastman Chemical, to Houston. And so I joined in 2009, and then I've been leading the research part of the business, and now all of CMA since 2012.
Okay. Half of your, you can almost say half and half, right? In terms of a career perspective.
I enjoy the consultancy piece. We talk to, we have many clients across the industry. It's always amazing to talk to different clients of different cultures, the personalities involved. So I find that a fascinating career choice.
I bet it is. All right. So tell us a little bit about chemical market analytics, because, Dewey, and you and I have talked about this before. People are a little confused as to who you are. Like, they know you're the people in the organization. In fact, Steve Lewandowski, of course, has been on the chemical show several times, but sometimes I know you probably see this. People keep referring to you by your old names. But let's talk about chemical market analytics and how you came to be.
Yeah, thank you. A number of my directs are, their own brand, I would say. You mentioned Steve Lewandowski, Nick Baffiatis and polyolefins, or Joel Morales. Pablo Georgi also does olefins. Duncan Clark, Peter Fang does aromatics. Ashish Bajari in Asia. Nick Kovics in inorganics, chlor-alkali vinyl. So yeah, our senior people are known throughout the industry. So formally, again, almost the whole organization, the body of intellectual property, and many carryovers came from CMAI. And so the legacy, CMAI was formed in 1979, and then it was managed as a partnership, much like a legal firm. And then in 2012, IHS acquired CMAI, and then shortly after that, well, IHS acquired over 50
I was
companies.
going to
I
say
think over
IHS was in a huge acquisition mode. So CMAI was not the only company they
we were
acquired
there.
at that time.
Right.
Yeah.
They were given the heads up, if you really want kind of the deep chemical insight, you need to go hire CMAI or to purchase CMAI. So
Yeah.
we were acquired in 2012, and then I think around 2015, Market, which was a financial entity, and IHS merged and became
Got it.
IHS Market. And so many people were pleased with that, because if you in the old days, if you did at IHS, it always deferred to his instead of IHS. So we were the base chemicals market coverage for IHS Market. And then in 2000, the deal was closed in 2022. As S&P was looking to acquire IHS Market, there was a couple of issues. Opus, which is also, we're together, Opus and CMA. So CMA has two business lines. One is market insight, which is why is the market behaving the way it is, and how is it expected to behave in the future, a forecast. And so the focus is really on causality of behavior and forward look. A key part of our business, that was our legacy, is our legacy. The other part of the business is, over time, we became a big price reporting agency, meaning we do discovery on how markets are transacting. We talk to buyers and sellers. We do the discovery sufficient to characterize the market, and then we provide an index or an assessment of what the market is transacting at. And clients often refer to that in contracts. So that's the PRA, price reporting agency. It was the PRA element of the business that overlapped with the Platts at S&P. So that overlap required regulatory agencies required for that to be divested from IHS Market before the deal was done, and Dow Jones was the acquirer. So
Okay.
we've had a new parent since 2022, and it's actually been a great ride, a really good parent. And just to comment on that, so Dow Jones, obviously known for its media organization, the Wall Street Journal and Barron's, but over the last few years, Dow Jones was seeking to also be in the business where unique content is important and provided, and leverages what Dow Jones is really known for as well, and that is integrity beyond question and trustworthiness. And that has been and is our legacy as well. So it's a perfect fit.
Love it.
And Dow Jones is fully supportive of the investment as we continue to grow to meet our clients' needs.
Awesome. 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 So the current chemical market analytics by what is it? Chemical market analytics by Opus, a Dow Jones company. Is that the official long name?
That's the long name. We're trying to collapse that.
Okay, and I'm on board with collapsing that, by the way. So, chemical market analytics is actually the formation when it was formed was the base chemicals business plus the price reporting agency.
Yes, well, and
Okay,
it's the two business streams, I would say, two work processes. We provide the service to clients as one package.
got it.
You get the price assessments, and you get the causality for that, as well as a forecast in one service deliverable, in one report. And then just a little bit about CMA. We're 220 plus, will soon be 250 people worldwide. And all the senior people and most of the organization came from industry with a commercial background. So that's
Got it.
very helpful understanding the client's needs, because we've been the client and we've sat in the chair and experienced the stress. And so We cover about 350 chemicals, all of the core building blocks, and then kind of the first order, second order, tertiary derivatives. We've always been global for many, many years, even CMAI. So obviously, big presence in Houston, but we're in Asia, in Singapore, a big office in China, but both in Shanghai and Beijing. We're in Malaysia, and then we're expanding in the Middle East, in Dubai, Qatar, as well as Saudi Arabia. So still growing our footprint in areas where we need to continue to be
Yeah.
bigger.
Awesome. Well, and that's a great segue because let's be honest, Dewey, the global chemical markets are something today, right? I think for both of us have been in the industry a long time. We've seen cycles, we've seen super cycles. I'm not sure what I would say it is at the moment, but maybe you can tell us that. But from your perspective, what are the biggest things that are shaping the global chemical markets? And, to a certain degree, what the heck is happening out there?
Yeah, it's a period of high uncertainty. We'll use some overused words here. Difficult for the industry. Good time to be a consultant. A good time to really to be a student of the market, which is kind of what I say we are.
Yeah.
And so kind of some major issues. Certainly, the market is in a period of oversupply. I show often in more some of the more recent events. Kind of, I use the ethylene cycle as one example. But if you plot, since the early '80s, through now, and our forecast going forward, this is the longest and deepest down cycle ethylene has ever experienced,
That's
ever.
crazy.
And so
Okay, so I'm going to ask you why. Like, it's
why that
easy to say it's about overbuilding, and we've overbuilt many a time, but what's really the why as to why it's such a deep down cycle?
Yeah, I've had that question even from we're going to point at China, but even from our Chinese clients, and all the majors are clients, ask us the same thing. It's like, okay, but so there's a number of factors. One is China has been marching down the pathway to self-sufficiency, and maybe the best example of that is in 2000, China's total global chemical capacity was about 20 million tons. By 2040, it'll be 400 million tons. So
Yeah.
China has now demand growth will be in that same pathway, but at the end point. But China's capacity build is just 45 degrees
Mm.
angle. So that pathway of moving towards self sufficiency has been, China has traditionally been a very capital efficient, a make or buy kind of player. But as they move towards self sufficiency, it's the first relief valve is backing out imports, and that's what they've been doing. And then when they overbuild, and that's happening across multiple value chains, then they move to export the chemical as well as the final product.
Yeah.
And so, how did they get here? So, one is self sufficiency. The other one was the demand profile that China was building to suddenly shifted downward dramatically. And so, and all this capacity was still in the pipeline, and it kept coming, and demand has still remained significantly suppressed.
What's causing demand to be suppressed?
Primarily infrastructure and the real estate market,
Okay.
as well, and consumer demand is down as well. So
Yeah.
across multiple sectors of China, growth rates are significantly less than they were before. So they're building against one demand profile is suddenly shift dramatically. The
Yeah.
other element is kind of exacerbating this is in 2030, China has said it will be the baseline for emissions reductions going forward. And so a number of clients now are building to become part of the baseline, and then can start reducing after that. But
Okay, so help me understand that. So for China specifically, this I guess ties into a sustainability and the greening of the industry, if you will. Their baseline emissions don't get set till 2030. So there's an incentive to hurry up and build and emit so that in the future you're being measured against that 2030 number. Is that basically the implication of what's going on?
China is very efficient and effective at playing at understanding the capitalist system, and that's kind of the rules that were
Okay.
provided, and they're very good at kind of operating within the rules.
Yeah.
So they're doing what rational market participants would do.
Yeah. Which is a little, is that timing different than other countries and regions? Because I feel like, let's talk about sustainability maybe is one of the trends that's really shaped certainly conversation across the industry as well as behaviors. We're targeting, well, heck, here we are, 2025 goals and 2030 goals and 2040 goals and reducing emissions to a different timeline. So is that right?
Yes, there's the climate accord, but originally it was concern about, or we showed across the industry there were various pathways shown to how do you get to no more than 1.5 degree C warming.
Right.
I think the general consensus is that the climate will warm higher, more than that. And then there's various initiatives. The EU certainly advancing forward in terms of addressing carbon emissions. The U.S., under the current administration, taking a bit of a pause on that. So I would just say that as I talk to clients across the world, it is a top of an agenda item at the C-suite. But it's also sustainability is also you need to be economically viable to. That's part of being a good citizen as well. And
Yeah.
so it remains a core initiative. I would say I haven't met a CEO yet that it's not a critical item and it's not on their. It's not on. It's on the CEO agenda.
Right.
I would
Right.
just let me return back to China for one quick
Yeah.
item. There is a black swan there that's kind of not. It's not showing up in our models yet, but it's a critical element. When I talk to the major players, the 15th five-year plan is due out next year, early next year. China's current refinery operating rate's about 70%. That's expected to plateau and perhaps decline further as China leads the way on vehicle electrification. And so China, the business model in China for the petrochemical industry is an integrated refinery petrochemical complex. That's the core base
Right.
business model. And so as refining operating rates are under pressure, downward pressure, how do they maintain a viable operating rate on refining? And one way to do that is to build out feedstocks and petchems. So the potential for even more chemical growth, capacity growth in China is reasonably high. And that will create more disruption. They will look to export. And so, again, that's call it a black swan because we are still quantifying what the implications of that are, but it does have significant implications for the global industry
That's
on the
interesting
oversupply. Yeah.
so basically because their oil demand for fuel for transportation is declining, they're going to be shifting more potentially into chemicals.
In China. Yeah.
Okay.
Yeah. And then just the other element on oversupply is if you're an advantage cost structure, people are still building. We still have a fair amount of capacity being added in the Middle East. We have some capacity being added in the US. So again, when you combine all that, but China's the most noticeable and significant disruptor.
Yeah. That's interesting. And of course, I guess what comes into some of this then is tariffs, right? So I know there's been a lot of discussion and uncertainty and what's happening and what's not really happening. And I think kind of the truest purpose that somebody could say is for tariffs is to help manage some of that supply demand flow and potentially dumping, if you want to use that term, or others. And yet we still have a lot of uncertainty. How do you see this playing out, Dewey? I mean, I know that your crystal ball is as maybe not as clear as anybody's at this moment in time. It's all a little bit unclear. But when you look at what's going on with this degree of uncertainty, what conversations are you having around this, and what advice are you guys giving?
Yes, one of the things we'll at least predicting the world, nobody can do that, how the world will come out, but at least we'll provide a core set of assumptions on that underpin our view. I think clearly, though, we're seeing a desegregation of the world, or a segregation, I should say, of the world, deglobalization, and it goes. If you go back to history, the chemical industry has been very good at build to export's been the model, and trade flow has then been a result of lowest cost optimization. And when we actually do, we do these quantified rigorous models. We do a backcast of trade flow across multiple chemicals. And it's amazing how, if you just do a linear low cost optimization,
Yeah.
it's very predictive of what historical trade flows have been. And so going forward, though, the equation is not just risk. It's not just cost optimization. It's risk management, and that's really changing. COVID was the beginning to show that to just plan on a global, efficient, uh, no disruptions is a little bit too naive.
Right.
And then the trade tariffs and the uncertainty, the political uncertainty too, has suggested even more so that supply chain management, understanding supply chains is critical. It's one of the things we'll talk about in our home events. And it was an event that it was a conversation we had at GPCA last year as we talked about. It's also at the C-suite conversation of the configuration of the supply chain and how that might change.
You use the word risk, and that's maybe the right word to think about because it's the geopolitical risks. There's weather related risks. Like we've certainly seen some supply chain impacts as a result of that. And then there's probably this whole sense of security, not just security of supply, but security of your own destiny, I would imagine.
Absolutely. Another trend line, I think of this when you bring that up, is kind of the changing competitive landscape for feedstocks.
Yeah.
Again, if you look at for a large part of the world, it's been this integrated refining to petchems, meaning naphtha to olefins, for example, and yet we see many clients, moving to ethane, and we're seeing that in every region, Europe, Latin America. I was at the APEC conference in May. Many China clients are moving to, many have already taken the decision to move to some production to ethane or mixed feed, and Southeast Asia as well. So we continue to see more. If they've not made the decision, it's under contemplation.
Yeah.
But that comes with risk. Ethane is a good example. Will those exports get tariff? Will there be a tariff? It's the supply is the U.S. at the moment. Will tariffs be applied? Will supply chains be disrupted? There are a number of U.S. clients, chemical clients. We have clients on the energy side as well going, hey, wait a minute. Why are we exporting our competitive advantage outside the U.S. to others exporting ethane? So, kind of ethane comes with risk. And we also find that as we do bespoke work, that clients often kind of, interestingly enough, operating costs, it's an advantage situation, but you need to make sure you've fully captured all the capex that's involved, and what's the return on investment there. So it's not a simple answer.
Yeah.
Um, and the other thing on supply chain, just the disruption there, we've seen a number of assets in Europe shut down the cracker, but not the derivatives, and we see ethylene now flowing from the U.S. to supply those derivatives. So there's some interim changes happening as we see this pressure on of oversupply and pressure on margins.
Yeah, I think. In fact, I'm glad you brought up it because I was wondering about this whole conversation around. We're seeing shutdowns. It seems like a lot of shutdowns. At least, every other week there's an announcement. It feels like about an asset in Europe shutting down. We've seen some of that in North America. I'm hearing less of that in other parts of the world. And yet, to your point earlier, with China's suffering some of the same operating rates, you would logically assume at some point some assets are going to shut down. So that's one piece of this. The other piece, though, Dewey, that gets into some of this is kind of the whole free enterprise and the freedom, market freedoms, right? So it's easy to say, well, why are we selling ethylene to a different country or ethane to a different country? And yet, of course, at least in Western economies, we're operating actually with a very much of a free market system, which maybe is more controlled in other parts of the world. I'm sure you're having these conversations. How are companies navigating these regional differences that are perhaps causing them to shut down in a particular region or balancing what their risks are as they look at their global footprint?
Yeah, I mean, in this kind of period where, oversupply, and by the way, we talked about the ethylene example. Across most chemicals, things really don't begin to improve until the end of the decade. And so, that's a
That's
5-year
that's
outlook.
not something anybody really wants to hear, Dewey, because everybody keeps saying, is 26 the year? I'm like, I don't know.
I think critical item would be kind of anticipate that could be the case, and then
Okay.
what I do in under those set of circumstances. So, I mean, I think that is the challenge. And then the U.S. operates a very, yes, to your point, I think the U.S., Europe one time I had, was at the EPCA, and the European economist said that the U.S. practiced ruthless capitalism. And that maybe is a good example. As does China, pretty much, except they have the overlay as well with government control. So I think capitalism under this stress period. The good thing is the weak will kind of over time the weak it cleans out the market,
Yeah.
uh, and with a 5-year duration, I think it's going to clean out the market. It's either low cost or you look at where the value is migrating, and you find the profit pools that you can participate in.
Yeah. So what do you think? So if this holds true that we see a 5-year recovery going forward, what's going to be critical for chemical companies and for chemical leaders to do to ensure that they're still in existence and successful and running profitable businesses over the next 5 years?
I think it's a great question. I think we've talked about it. It's kind of like how do you balance short term situation with long term?
Yeah,
And
absolutely.
it reminded me of kind of a workout, right? There's metabolic conditioning, cardio, and there's muscle development, and you gotta do both. And
Right.
there and so in that way, you gotta kind of you gotta survive, and yet there's the long term. What am I going to be as I go forward? So when I look at this, I think kind of some of the keys to success is if we are looking at a chronic oversupply, or at least one for a reasonable planning duration, it's time to be decisive now. It's not going to get any better in the near term horizon. And so to delay means just prolonging, kind of a decision. So, and then the other thing is, I think we will see more M&A. As we do bespoke work, we're seeing that we see it before it becomes visible. So, we're certainly seeing a lot of activity from clients in not only in the market sector but in the financial sector. We have clients across the spectrum, and
Yeah.
we're seeing a lot of analysis being done, and kind of different kinds of either asset reconfiguration or acquisition, divestiture, partnership. I
Yeah.
think where you draw the boundary around the entity, I think we'll see more, kind of collaborations that deal with how to be more efficient and effective.
Yeah. Yeah. I mean, it is definitely an opportunity for people to think about reshaping their portfolios, reshaping not just their assets and their assets, their products, their people, and I guess their business relationships.
Yeah, you talk about people. One of I was thinking of disruptive issues or kind of critical issues. We can't have a conversation and not at least bring it up, and that's AI. And
Yes.
I was with the Dow Jones. We had a Dow Jones Leadership Summit last week. AI was a topic, and we had multiple speakers. Everything from the world's going to be different. You got 35 months to deal with it. To it's a world of huge opportunity, and it's kind of both, probably,
Yeah.
right? But when I think about what I see and what some of our clients are doing, it certainly affects product development. What's happening there, technology, service provision, and how we deliver services, staffing. That's kind of the big issue that's on in the news a lot. Of there's a well publicized item. I think McKinsey said that they're going to 5,000 staff members are affected because they're putting that investment in development of agents.
Wow.
And there's agents and then there's agentic systems. And so that's more complicated than I fully can explain, but I think it definitely is the case. And I think it will be a critical issue that will affect us. And I think the chemical industry, I would call us a laggard in this space, frankly. And I do believe that the wave is coming faster than we're currently preparing for it.
Yeah, I agree with that, and I think it's not easy. And I've had a number of conversations, and I was kind of at a quasi think tank session earlier this year, specifically around digitization and AI and how companies inside of chemicals are harnessing that. And it's not easy. A lot of it is based on, when you think especially about, a lot about AI requires really good data, of which we have tons of data, reams of data, thousands of, and probably millions of data points. Our ability to harness it, our ability to share it effectively across boundaries, because of course that's one of the things that makes it tricky, right? Is a lot of the boundary conditions that we set. But AI it's here. I mean, I got to be honest, I use it all the time. How about you? Do you guys use much AI in business today?
We're definitely using it. I'd say we're at different levels across the business. Even at the corporate level, there's a strong initiative.
Yeah.
We announced earlier this year, Dow Jones has a partnership with ChatGPT, a strategic partnership, but we're using it across the business. And by the way, I'll give a learning for me that I learned last week is we had one of the AI players in terms of using the system. A great prompt is to ask, whether it's Gemini or whatever you're using, to ask AI to continue to ask you questions until you've met your objective. And so instead of you having to think and ask the next question, let it continue to ask until you converge on what you need.
Yeah,
So that
that's a
was a
brilliant
great
one.
prompt.
I've started to use that myself. So I'll go in and I'll ask, say, hey, this is what I'm trying to do. These are my, and then I will say, okay, is there more questions or other information you need in order to give me that result? And that's helpful. Okay, so we're getting close to wrapping up, but I do have a couple more questions for you, Dewey. So I'm just going to ask, so how is it being part of Dow Jones? So I got to be honest, I am a long time, I think about Dow Jones and I think about the Wall Street Journal, and I am a long time subscriber. I love the Wall Street Journal, shout out. But Dow Jones brings its own presence and reach and impact. How is it for chemical market analytics being part of the Dow Jones enterprise?
So first of all, my team is not my org chart; it's Dow Jones. So it kind of starts with that kind of a thought process.
Yeah.
We're seeing. So first of all, I love being a part of the Wall Street Journal. 34 million unique viewers a month. We've all often said in the chemical industry that the general public doesn't understand us. So we continue to have the opportunity. To be clear, the media group is very independent and they will do their
I've
own
heard that. Yeah.
discovery. But it gives us, we're asked to provide a view, and we provide that. So, and then they'll ask everyone else as well. So it's a huge opportunity there. We do find it's also an opportunity as we look at the Middle East and the countries there, as they continue to seek the news and seek coverage that's objective. The media organization provides that opportunity, and the Dow Jones footprint in a holistic way is there to support them.
Got it.
So I think that's terrific. And Dow Jones is really excited about the energy and the chemical sector, one of the most important sectors affecting general public and industry, or the world, and so they have been continued to be very supportive, and they've provided us as we've asked for resources to meet client needs.
Yeah.
They've been very supportive in our investment requests.
Awesome. That's always good. It's always good to have a good parent company.
I'll mention one other example, Victoria.
Yeah.
So we're having our World Chemical Forum is next March,
Right.
March 25th and 26th. We have the opportunity to make that unique, and so one of the unique items is certainly both participation and coverage by the media groups, the Wall Street Journal and Barron's, And on the participation side, it allows us to bring in the senior journalists, and their core expertise is ensuring that the issues are surfaced and
Yeah,
discussed in detail. And as you know from Wall Street Journal articles, they don't do fluff pieces. It's really a detailed analysis, objectively done. So I'm really excited about that.
that's cool.
I'm also excited about the fact that, kind of from our core on Insight, we'll definitely discuss the issues, critical issues in terms of what's happening, but we'll go a lot deeper than that and talk about where's the market going, what are the implications of that, and if the world evolves differently, what are the scenarios around that. So if you think of it from a game theory analogy, it's what's the objective or what's the problem, what are the constraints around that problem? What options do market participants have? What are preferences that are being looked at? And then what are the potential slate of outcomes?
Yeah.
And it's kind of that detailed analysis that leads to real action is where the conference will go. And it'll be heavily focused on not just kind of momentum, but where are the disruptors and where's the innovation happening. It will be a big push on innovation, change, disruption, and momentum will be what momentum is. But
Yeah.
I think we're in a period of pretty big change.
Yeah, absolutely. So therefore, people need to keep relying on some good data and inputs and value and stuff. So I think that's great.
We're
And
excited.
World Chemical Forum is going to be in Houston. Is that right?
In Houston, actually in the Woodlands.
Oh,
Again,
okay.
we wanted a resort-like setting because the focus again is on thought leadership, innovation, disruption. So we really wanted to mix it up.
Yeah,
And again, the focus is decision makers in the room.
got it. I like that. I like that. Awesome. Well, Dewey, this has actually been great. Not actually, this has been great. Of course, it was great. Uh, I really appreciate you taking the time and sharing a little bit more about yourself. And I'm going to call it the new chemical market analytics, even though you guys are 3 years old, and what's going on in markets today. So thank you for this.
Thank you. Yeah, we're actually 46 years old. 46 years old. We've just been called many things over time.
Yeah, no kidding, right? Well, what's old is new again and all that good jazz, I guess.
Well, Victoria, terrific. Great to be with you. Thank you.
Yeah, thank you. And thank you, everyone, for joining us today. Keep listening, keep following, keep sharing, and we will talk with you again soon. Thanks for joining us today on The Chemical Show. If you enjoyed this episode, be sure to subscribe, leave a review, and most importantly, share it with your friends and colleagues. For more insights, visit thechemicalshow.com and connect with us on LinkedIn. You can find me at Victoria King Meyer on LinkedIn, and you can also find us at The Chemical Show Podcast. Join us next time for more conversations and strategies shaping the future of the industry. We'll see you soon.